Hi, tonight is Tuesday, January 29th, 2019. We're taking a look at the S&P 500 as we get ready for a big day tomorrow with the Fed, with the Fed statement at 2 o'clock, press conference, and then after hours we have some earnings reports. I went over those in the weekend video, and I'll post a screenshot of the calendar in this thread for tomorrow. But I just wanted to go over real quick where things are at. I promise this is going to be a really short video. So here we are so far on the week, Monday and Tuesday. We started with a gap down open off of Friday's close, leaving this 20-point gap. But we did work our way into it a little bit today, making a higher high over yesterday. Yesterday's high was 26.44, and today's high got up to almost 26.51. So we did work our way into this gap a little bit. This gap doesn't fill until we get to 26.6476, whatever Friday's close was, yeah. So that's what's going on there, and you can see we've got our rising 10-day simple moving average, and it's going to rise once again tomorrow. So we just heard from Apple. Apple reported okay. I guess it was, we already knew because they pre-warned what was going to be happening with them, but they didn't post as bad of an outlook as the market maybe expected. And I think I heard that AMD reported after hours or something and is rallying. I might have that all wrong, but in any case, what we want to look for in the morning is for buyers to be there, the 3 a.m. crew to be buying up futures tonight in the European markets to start off strong, and to be rallying ahead of the Fed tomorrow. And that way we can fill this gap up here to 26.64 and maybe get some unfinished business taken care of there. Here's the thing, though. When we look at our intraday chart, we have a bit of a head and shoulders formation that starts off back last Wednesday. So it's going on about a week old at this point. And in order to foil this head and shoulders formation, we do have to take out that high that was made on Friday, or considerably get above it. So if we can't do that, then we run the risk of fulfilling this head and shoulders pattern. You can see it. Here's the left shoulder. Here's the head. Basically the entire range that happened on Friday, and then here's the right shoulder. And you can see it's the head of this thing is just floating out there, out in limbo with nothing underneath it. So if we don't fill this gap, it just sort of adds more to the thesis that this is going to be the top for now, that we're going to fail from here and roll over and maybe get that correction that we've been looking for that goes back and takes care of some levels to the downside. But in any case, if we're going to just simply, for step one, fulfill this head and shoulders pattern, we draw a line from the top of the left shoulder through the neckline here, which was Monday's low, and let it extend on down. And I was looking to see if this was maybe going to fulfill today into the close, but it didn't. If we come in tomorrow and for some reason trade down instead of up, maybe if Boeing reports badly and spooks the market or something with some talk in their conference call, and we fulfill this early, it would take us down to about 26.10, a small break of the 50-day simple moving average if it happens early. If we open and trade up a little bit and then sort of fizzle out, and this lingers on until when the Fed comes out at 2 o'clock, and if Powell says some things that roil the markets, and this takes longer in the day to fulfill this head and shoulders pattern, then it's going to be deeper damage. It's going to take us all the way down to about here, the later in the day that it occurs. It's going to take us all the way down to about 2,600. And this is just a target line. We might blow right on through this. And if that's the case, then, as I've said many times, we're probably on our way to revisiting 25.85 if we really start to break down here. That 25.85 makes a lot of sense because that's our scene of the crime level from the December Fed meeting. So if he's going to step in shit again and spook the markets like he did last time, why wouldn't we just trade back to where we were in the first place the last time he did it? And this was our high at that point. This was a high that we traded up to, so this would be a low that we trade down to. So in some sick, twisted way, it would actually be bullish if we just traded down here and bounced off of it. So in any case, if we come in tomorrow, though, and we fill this gap and move above it and hold above it before the Fed comes out, then really maybe all we would end up doing is maybe coming back down and testing maybe a halfway back between today's close and whatever high we've made, or maybe a halfway back on the week, whatever high we've made before the Fed added to our low that we've made so far this week, which still stands at Monday's 26.24. We would add those together and divide by 2. I'll do all that stuff. I'll come up with the ideas and stuff in the moment, but I'm just trying to give you the possible scenarios, okay? So to review, either we're going to come in and fill this gap and hold up here and kind of sort of foil this head and shoulders pattern, or B, we're going to come in and take care of it right away, or C, we're going to just sort of sit here in the middle and run the risk of maybe rolling over at the end of the day and making it an even more, deeper dip down to fulfill this pattern, to get down and test this line. And if this line breaks, then we're going to go all the way down to revisit the same level we traded up to at the last Fed meeting, 25.85. Okay, have a great rest of your evening. See you in the morning.